Welcome all to the course on financial inclusion and cyber safety. I am Dr. Gitanjali Bhatt Sharma, working as an assistant professor at Uttarakhand Open University in Department of Management Studies and Commerce. Today, being the first lecture, we will start with the understanding of financial inclusion. So first of all, we will start with the meaning of financial inclusion. Then we will talk about the pillars of financial inclusion, its importance, and finally about the financial products. So before moving on to the meaning of financial inclusion, we know if we look at the current scenario in India, as we can see, there are many poor households in India who still lack access to formal financial services, and there is a very large segment of population which remains unaware of banking system, and even if those who are aware, they may face some practical barriers like documentation or remote location. So these challenges highlight a major gap in our financial ecosystem. And to address this, we turn into a very important concept, that is financial inclusion. So, in simple words, if we say financial inclusion essentially means that every section of society and every person in the economy should be included in the financial infrastructure of the country. Financial inclusion means offering banking and financial solution and services to every individual in the society without any discrimination. It primarily aims to include everybody in the society by giving them basic financial services without looking at a person's income or savings. This financial inclusion chiefly focuses on providing a very reliable financial solution to the economically underprivileged section of society without any unfair treatment. So, learners, financial inclusion intends to provide financial solution without any sign of inequality. It is also committed to being transparent while offering financial assistance without any hidden transaction or cost. Financial inclusion wants everybody in the society to be involved and participate in the financial management judiciary. So, moving on to the pillars of financial inclusion, there are 5 pillars of financial inclusion. The first pillar is accessibility. It ensures that financial services are physically and digitally reachable, especially in the rural and underserved areas. Accessibility also involves expanding bank branches, ATMs, mobile banking, and agent network to the places where financial services are not available. Second point is availability. It refers to the range of financial products and services such as saving, credit, insurance, pension, and remittance being made available to all the segments of society. It helps in meeting various life needs such as needs like health emergencies, education, and business development. Example of availability can be microfinance institutions which offer micro loan and micro insurance. Third is affordability. Financial products and services must be very cost effective and it is reasonably priced for low income individuals. It includes low transaction fees, a zero balance account, and low interest loan. Now, awareness. Awareness focuses on financial literacy and education so that people can make informed financial decisions. It involves community training, school curriculum, and media campaigning. Another is adequacy. Financial services should be adequate for the needs of the target population, ensuring they meet the specific requirement of individuals as well as businesses. Now, moving on to the importance of financial inclusion. What are the importance of financial inclusion? Financial inclusion is very crucial for the economic growth, poverty reduction, and social equality. It empowers marginalized communities, especially the women, and supports entrepreneurs, and it promotes a digital and social inclusion. It contributes to a more inclusive, resilient society. Now, the first importance is economic growth. How financial inclusion helps in economic growth. Financial inclusion fuels economic growth by enabling all individuals, especially the underserved, to engage in economic activities. It promotes saving, investment, and productivity, and which in turn is very helpful in boosting the national GDP also. Financial inclusion is helping in poverty reduction. Like access to financial services allows low income individuals to save easily, borrow, and they can also manage their risk. This will break the cycle of poverty, and it provides a very safety net which will help people build assets, and even it will reduce economic vulnerability. The next importance is women empowerment. How financial inclusion is helpful in making women empowered. Financial inclusion empowers women by granting them financial independence and improving their social as well as their economic status. It opens avenues for them to save, to invest, and they can also contribute to the household income. Financial inclusion is helpful in entrepreneurship and employment. Like inclusive financial access supports small, medium enterprises by providing them essential credit and even fostering entrepreneurs and employment. This will not only strengthen the local economies but also it will contribute to the job creation and innovation. Financial inclusion, one of the importance of financial inclusion is social inclusion also. Financial inclusion bridges the societal divides by ensuring everyone has equal access to financial services, and this will promote social equity and reduces disparities between the urban and the rural population, and it will foster a more inclusive society. Financial inclusion is important for digital inclusion also, because as we all know today technology plays a very important role in financial inclusion. It increases access to digital financial services and also contributes to digital inclusion by allowing more people to participate in the digital economy. Now, this is about the importance of financial inclusion. Now, moving on to the financial products of financial inclusion, there are some of the financial products. The first is what are the saving products? So, the first saving products is basic saving bank deposit accounts. These are very simplified bank accounts which are meant for the individuals to encourage financial inclusion. And this typically comes with the no minimum balance requirement, and it will offer a basic banking services, deposits, withdrawal, ATM access, and this will also limits the free transaction. Next saving products is the recurring and fixed deposits. Depositors in recurring deposit RD in recurring deposit, which is called as RD. In that, the depositors deposit a amount of money every month, and in the fixed deposit, the depositors deposit at one time amount of money. In the same way, there is zero balance account which is under the Pradhan Mantri Jan Dhan Yojana, and these accounts are the part of government initiatives to ensure financial access for all. Now, there are also some credit products. The first credit products is General Credit Card, GCC. These are the general credit cards are the unsecured loans for the individuals in the who are in the non-farm sector. So these credit limits typically up to 25,000, and this will help the small traders, vendors, and the very low income earners. There is also Kisan Credit Card, which is basically designed for the farmers to meet agriculture expenses. And it's provide a very flexible short-term credit for crops and allied activities. And this KCC also includes interest, subsidy, and insurance benefits. There's the microfinance loans. Microfinance loans are the small type of loans which are given to the very low income individuals. Especially these are for women, usually offering through microfinance institutions, MFIs, or it can be from self-help groups. In this, there is no collateral needed, and this will not only support their livelihood, but it will also increase the self-employment level. There is the self-help group small loans. These loans given to the SHGs, basically the women from 10 to 20 women members of SHGs, and based on group guarantees and even mutual accountability. This will not only promote saving, but it also create a credit discipline and provides a financial independence. Now, another is a overdraft linked with which is under the Pradhan Mantri Jan Dhan Yojana account, and there's a small overdraft facility which is up to rupees 10,000 on Jan Dhan accounts, and this offer emergency credit to poor account holders. And in this also there is no collateral required or any, and in this ensures and this promotes financial resilience. Now, there are some insurance products, and the insurance products cover Pradhan Mantri Suraksha Bima Yojana, that is a accidental insurance, which provides affordable accidental death and disability cover, especially for the poor and the underprivileged masses. In the same way, there is a Pradhan Mantri Jeevan Jyoti Bima Yojana, which is a life insurance yojana, and this offer affordable life insurance to ensure financial security for the family in case of the policyholder's death. One of the insurance products is crop insurance also, which is Pradhan Mantri Fasal Bima Yojana. This helps stabilizing farmers' income, and this also encourages them to adopt a very innovative farming practices. Likewise, there are some pension products also, that is Atal Pension Yojana, APY. In this, for informal sector workers, provide old age security to informal sector workers by ensuring a fixed monthly pension. And one more pension scheme is there, National Pension Scheme, NPS Lite. This promotes retirement saving among the very economically disadvantaged section. Old age pension scheme is also there, which provides social security to the elderly poor individuals which are deprived of any regular means of income, and they do not have any means of income. Now, there are some remittance and payment products. Remittance and payment products comprises mobile banking and UPI based services. Like we all know that today's era, there is a use of smartphone is prevailing everywhere, and the use of a smartphone or features phone to perform banking transactions through mobile apps or USSD codes. And there is a real time fund transfer between bank accounts using their mobile apps. Everybody nowadays is using Bheem, like Bheem, Google Pay, Phone Pay, etc. So these are the mobile banking and UPI based services. In this way, there is Aadhaar enabled payment system is also there, AEPS. Here the bank account based payment system using a Aadhaar authentications. RuPay debit card is also a remittance. RuPay debit card, remittance and payment products is RuPay debit card. This is for the ATM withdrawal, online shopping, and this is also helpful for the point of sale transactions also. And finally, the business correspondence services. Business correspondence services, BC services. In this, the retail agents are engaged by banks to provide banking services in areas where banks do not have branches, especially in the rural or very remote locations. So these were the financial products. That's all for today's lecture. The learning outcomes of today's lecture, what we learned here are we learned about the core concept of financial inclusion. We understand the key pillars of financial inclusion. We talk about the importance, and we also learn what are the financial products and tools which enables financial participation. So, in the next lecture, we will continue with the same topic. Thank you.